Hey all, welcome to ShareTrekc. This is Raj here. Friends, I have some bad news. I have a viral infection. I think my wife had it first. It's a 7-day cycle. She's just coming out of it and I have just caught it. So what happens is a bit of fever and a bit of problem with the throat. Whenever I go to sleep, start coughing a little bit. So if in the next 7 days you start seeing faceless videos where there is just voice and TradingView in front of you, it's because it's easier for me to edit out my coughs when I'm talking. So that's what I would like to let you know. But having said that, today's video is going to be even a more deeper dive into what could happen on Monday. I've been racking my brains over it because the cup and handle pattern is really juicy, both on FNGU as well as on QQQ. And at the same time, the VIX is looking dangerously low. Can it go any low further? So we already had that discussion. I'm going to do a very brief recap, maybe 1 or 2 minutes of recap, and then I'm going to talk about new indicators that I'm going to look at along with you and try to figure out what could probably happen. So with that said, let's get started. Welcome back, friends. So here is a brief recap so that you have anybody who watches just this video can still get a complete feel of the thesis that I'm developing. So let's get started by going to the TradingView platform, and that's where most of our action will take place, and then I'll come back. We'll also talk about economic indicators that are going to come out next week. I'm not going to talk about the whole week, but the first 2 days and an important event later in the week. So with that said, let's go to the TradingView platform. Well, here we are in the TradingView platform, and what we are looking at is the VIX. This is weekly candles, and it's looking dangerously close to the support that we have here. VIX has been falling continuously, and in the near past, I think the lowest it has gone to is 8.53. Will VIX fall into the single digit? If it's going to continue to fall, we are going to have a situation where you don't have too much of option premiums, and the market is going to keep on moving slowly upwards and sideways. That's what is going to happen. So if the VIX turns back around, then probably we'll start to see prices coming down. So it's very thinly poised. We don't know what's going to happen. If you look at the past performance of VIX, as I said last time, VIX has turned around even at 15.12, sometimes it has turned around at 14.33, and sometimes it has gone as low as 8.64. But in general, I think the floor is at 11.42. If it goes below that, I would be surprised. But you can see that the momentum is also dropping, and the MACD is also turning towards the signal line in a bearish manner. So there is still a little bit more juice left out here. So that's what I had said about VIX before. Now, next we are looking at the QQQ. I already showed this to you before. And in QQQ, we have a coveted cup and handle pattern, and if I was to look at the projection of what price it would be having as a target, it's a juicy 494.47. Right now we are at 389.51. That's something which is worth salivating over. But then we have a resistance band out here. Are we going to be able to pierce through it? So if you look at the VIX and then look at this, there seems to be a possibility that we might definitely get into this box, but whether we are going to get out of the box on the other side is the question we have right now. And we are going to look at new indicators also to try to see if we can get an answer anywhere out there. So this is the second point that I had mentioned before. Next, let us look at S&P 500. Even in S&P 500, we have the cup and handle pattern out here, and we have a target for S&P 500 of 531.28. And considering that we are at 455.30, that again is a juicy gain that cannot be ignored. And we can see that the MACD is also bullish, and the momentum is also high with a lot of room for the RSI. So can S&P 500 go up further? Yes. Then it has got a resistance out here, which is at 470.94. Will that resistance push it back down? So that's the question. And just to be careful, I'll draw another resistance line out here. Let us make this red, and this is going to be a resistance at 464.31. So we have these resistances out here. Can S&P 500 cross through that? That is a possibility because everything is looking good out here. MACD has just crossed over to the bullish side and has become green. And also another thing we can look at here, right, is that we have a kind of a bullish movement when it comes to the MACD out here, assuming there is some such thing as a bullishness out here. And also, if we were to draw a line from here to here, so it's an ascending line. So there is a little bit of bullishness here also. So there is a correlation out there. Next, let us look at FNGU. In FNGU, last time I met you, I had drawn out the length of the bull flag and projected a target price of 259.72. Another way of looking at this could also be, I'm not sure about this, but I'm just going to project it out there and see what happens. So consider this to be the neck of a cup and handle pattern, and then let us project how much it can move. So I'll take this as the bottom and go all the way to the neck and then clone this and convert this color to something different so that we can just pull it out and differentiate. So that gives us a target of around $324 approximately. So there is a lot of juice left here also. And if you think about what is in FNGU we have Apple, Microsoft, Netflix, Meta, those kind of shares. Most of them are doing very well, Google. And the reason why FNGU can potentially cover this huge of a distance is because it is triple leveraged. So for every 1 unit of movement in the underlying, this can show a movement of 3x. So this is quite possible for FNGU to achieve, to go all the way to 323.59 or around $320. And it's also possible definitely for it to go around 261.31. So I'm just going to junk this cup and handle pattern because I don't think it's a cup and handle pattern. I had to force it. But I'll go with this bull flag theory and I'll stick to a target of 259.72. Then the question becomes, is it possible? I think the answer is yes, because we have a MACD which has become bullish and we also have momentum which is above average, very strong, and it has got plenty of room for the RSI to overheat. So there's plenty of scope for FNGU as well to do very well. Now let us look at the US dollar index. Okay, I'm not going to draw the cup and handle pattern completely. We don't have to go out there. What I'm looking at here is the bear channel being breached and US dollar coming out. Now, the reason why US dollar index goes down or goes up is correlated with the interest rate expectation of the US. So when the US interest rates were expected to keep going up, you saw the US dollar index going up. Now, with the expectation that the interest rate will come down, the US dollar index is coming down. So this breach could be momentary, we don't know. But everything depends on a bunch of economic data that's going to come up next week, including a speech by Fed Chief Powell and 2 other Fed chiefs during the week. So that's going to be potentially a market catalyst. Is it going to be positive or negative? We don't know. But I'll talk about those events subsequently. But right now, what is important to know is we can look at it in 2 ways. One is we can draw a line from here to here and then project it upward and put a target. And I think US dollar index has already met the target. Let us just confirm whether it has met the target. So if I was to find a target, I'll draw a line from here to here. And then I'll clone this. I'll just change the color so that we can see it clearly. And I'll move it up here. So as you can see, we perfectly met the target. I'm going to draw a horizontal line here so that you can see that we have met the target. We met the target exactly and we started coming down. Now the question is this a bull flag? Can a bull flag be this long? And is it going to go up again? So if we had to take the length of the flag, right? So let us do the flag length thing. So let us assume that the flag starts from here and we take it all the way up to here. And we clone this, bring it out here, and this is the spot of breakup. So, which means that it is most likely to go all the way up to 13,310. That could be the projection if this is a bull flag. Or if this is a one-off random break, then I think it should go down, and this support out here at 12580.11 will be a turning point, and that nicely coincides with what's going to happen next week in terms of a whole bunch of economic news that is coming in. And if we look at MACD, it is bearish, indicating that we are going to go down further, but it's moving towards the signal line. And there's a sudden spurt out here for momentum, which means that markets still feel probably the forward guidance may be slightly hawkish than the current. So that could be one way of looking at it. And how many of the market participants have that feeling, I don't know. But we saw a huge jump out here, and that is something to worry about. Now, having done this, I want to talk to you about some of the key stocks. We have, let us look at Apple first. So Apple met and exceeded the cup and handle pattern, and then it had this upward movement with the bull channel, and now we have a consolidation happening out here. And the last candle out here after series of 3 was a very, very small candle. Of course, we can say it was a short weekend, and as a result of which the volumes were not there, but the price movement was very minimal. And if you look at the MACD, it's just about crossed over to the bullish side. The volumes were low, and the momentum is above average, but it's a bit flat. So there's a good chance that Apple might start coming down again. It lost 0.70% on Friday. Now, if we were to look at, let us say, these are all weekly charts that we are looking at. If we were to look at the next one, which is going to be Google, let me see where Google is here. So if you take the chart of Google, we have had 1, 2, 3, 4 consecutive bullish days. And after the third candle, the fourth one is smaller. It's an inverted hammer. And again, another thing to note is that if you have consecutive days like these, 3 or 4 consecutive days of greens, then it's inevitable that there will be some profit taking and you'll have a red candle. The chances of a red candle is increasing as far as all these stocks are concerned, which have enjoyed a continuous run up last week. And if you see 4 weeks out here, this is the first week, second week, third week, and the fourth week. So 4 weeks of bullish run. That definitely says that somebody would like to take their profits, and a good portion of the market might start realizing profits, and that can push us down. The momentum is also slowing down a bit. It's become a bit flat, even though it's above average. And the MACD is moving towards a signal line. It has been traveling in that direction for a while. So there is no divergence here. If you look at the momentum, as well as the MACD, it's all moving in the same direction as the price. So there is no negative divergence or anything that I can use to say that prices will definitely fall. So we are all waiting for what happens next week. Now let us look at another bellwether, which is Microsoft. And in case of Microsoft also, we have the same kind of pattern out here. But Microsoft is overbought, the RSI is overheated, MACD is absolutely bullish. And if you see 1, 2, 3, 4, 5 weeks of positives. Another thing I would like to point out in Microsoft is that these are 5 weeks, 1, 2, 3, 4, 5 weeks of green candles. Let us look at the past. There was one occasion where you had 1, 2, 3, 4, 5 weeks of positive candle. After that, we started having red candles. Then 1, 2, 3, 4, and then red candles. 1, 2, red candle. 1, 2, red candle. So even if you look at the bearishness, right, the maximum was 1, 2, 3, 4, 5 bearish candles and then a bullish candle. 2 bearish and then a bullish. So I'm thinking that Microsoft is also likely to give up some gains because people will start booking profits. In fact, I'm planning to sell my shares, my Microsoft shares to book profits. I will not sell all of them, but I'll sell part of them so that I can realize partial gains, because catching it afterwards is going to be very difficult. And now, even with Microsoft, if you see, there is a double bottom out here. So let me also project a double bottom price target. So if I take this as the neck and I clone this and I move it out, then we have a price target of around 357. So we already exceeded the price target. And this again is an all-time high for Microsoft. So something has to give. And even if we were to look at the other double bottoms that we had formed before, we are well past the price projection out there, and the RSI is overheated. So Microsoft definitely has got to give something tomorrow, on Monday. And then let us look at Netflix, which has had a good run. And Netflix has had 1, 2, 3, 4 4 continuous green candles. Maybe it can eke out one more green candle because RSI is not overbought, MACD is bullish, but the volumes are thinning out here. So we'll have to see what happens next week. And for next week, we have a whole bunch of catalysts out there. And I'm going to talk about the catalysts by taking it to another website, which is the economic calendar website. And this has just got US economic events. And the first thing I want to talk to you about is the Dallas Fed Manufacturing Index. So this can give an idea. It's a leading indicator of broader economic trends. Manufacturing is a crucial sector because it's sensitive to changes in overall economic conditions. An expanding manufacturing sector can be a sign of economic growth, while a contracting sector can be a signal of economic contraction. Now, the previous reading was minus 19.2 and the current forecast is minus 17. We'll see what happens on Monday around 10:30 a.m. That's when the first catalyst will kick off. And then the other one that you can see is the 2-year note, the 6-month bill auction, 3-month bill auction, 5-year note auctions. All these are there. The 2-year note auction, like the results of these auctions can influence the bond prices and yields in the secondary market, which in turn can affect a wide range of financial instruments and markets. So if the yields start falling, that means people have to pay more for the bonds, and therefore money will start coming into the stock market, which is what is happening right now. However, if you look at the US dollar index that we saw, there was a spike out there. And if the yields come higher out here, then we'll probably, we can extrapolate that the markets are going to fall, the stock market is going to fall because the money will go into bonds rather than into the stocks. That's the way I understand it, and that's the way I read it. And also strong demand for treasury securities at auction may indicate a flight to safety or a preference for low risk assets among investors. This could suggest a cautious or risk averse market sentiment, potentially leading to increased demand for defensive stocks. So when we talk about market sentiment and need to avoid risk, I want to show you the fear and greed index, which CNN Money publishes. We are firmly in the greed, tending towards extreme greed. So whenever these things have happened, it has been very dangerous. The market had been frothy. So there is a good chance that we might come back down again to fear and extreme fear. And you know how it was when that happened. So now coming back to the yields determined in treasury auctions reflect market expectations for inflation. Higher yields may indicate rising inflation expectations, which could impact stock prices, especially for companies that may face increased costs in an inflationary environment. Changes in the yield curve, the difference between the short-term and the long-term interest rates, can have implication for the stock market. An inverted yield curve where the short-term rates is higher than the long-term rates has historically been a precursor to economic recession and may influence investor decisions. And the Conference Board Consumer Confidence Index is another widely followed economic indicator that we can look at, which is the CB Consumer Confidence Index out here. It's currently, the consensus estimate is 101, and previously it was 102.6. And this measures the level of confidence consumers have in the US economy. It is published by the Conference Board, a non-profit research organization. The index is based on survey of consumers and reflects their perceptions of current economic conditions and expectations for the future. The forecast, however, is 102.1. What is important to note is both of them show a decreasing consumer confidence because both of them are below the current, the previous reading that we had. So that's the thing you have to keep in mind. The Consumer Confidence Index is released monthly and is composed of 2 sub-indices. So the Present Situation Index is one part, which this component assesses the consumer's current perception of the economic environment, including factors like employment conditions and business conditions. And the next component is the Expectations Index. And this component gauges consumers' expectation for the future, including their outlook on business and labor market conditions over the next 6 months. The index is expressed as a single number with 100 as the base level. A reading above 100 indicates optimism. So right now we are still above 100, so we are indicating optimism, but the consensus shows that the optimism is fading compared to where we are the last month, and anything below 100 suggests pessimism. So in our current market environment, pessimism is a good thing for the stock prices, in my opinion, because then the Fed becomes dovish and the Fed will not increase the interest rate and potentially may start talking about a date when the interest may start coming down in order to avoid a recession. So that's the way I look at it. If we coast through all of this successfully, I'm not going to read what is happening on Wednesday, Thursday, and all those things. We still have on Friday Fed Chief Powell speaking. So the Fed Chair Powell is going to speak at 11 a.m. on Friday, December 1. And you know, when Papa Powell speaks, anything can happen. So we don't know what he's going to speak about. And also there are a bunch of Fed governors who are going to speak during the week. Any of these can be a catalyst during the week. So what I'm planning to do is, first thing, Monday morning, what I'm planning to do would be to place a covered call on Bluebird because I don't want to lose it. So I'll place a covered call and take whatever premiums I get so that I can make some money out of it, knowing that Bluebird will go down if the overall market sentiment is not good. Likewise for CRISPR, in which case I can buy back and close out my covered call and free up my CRISPR and wait for the next rally, which will definitely come for both Bluebird and CRISPR because of the PDUFA date. So a funny story, I was speaking to someone from the industry about PDUFA date and they laughed and they said, you know what, it's called the PDUFA date. So we'll follow the industry convention, and if you hear me say PDUFA date, it's basically PDUFA. Okay, so that said, I think when the PDUFA date approaches, both CRISPR and Bluebird are going to jump up. And I think I'm looking at $5 for CRISPR and I'm looking at $80 for, I'm looking at $80 for CRISPR and $5 for Bluebird. That's what I'm thinking of. And that's what I'm going to do on Friday. I'm also going to liquidate my FNGU. I have a lot of profits there, almost $4,000 worth of profit there. So I'm going to sell it all and keep it handy. And I'm going to look at keeping the money ready in case we drop down and then we go back up again. So you saw there was a support line as far as QQQ is concerned and FNGU is concerned. So it can come to the next support and there's a potential for it to bounce back up. So if it bounces up, that day I will buy back the shares that I sold and again ride it up for profits. That's my plan. It may or may not work out the way I think, but that's what I'm planning to do. So friends, that's the way I'm looking at the overall market. Today I'm doing a little bit of a marathon session. Let's go and quickly look at genomics before we close out. Well, we are looking at DNA now, and DNA has migrated to a superior bear channel, and the good news is that we have a support here at 1.37 and DNA seems to have taken that support. So if it starts moving sideways, then it can consolidate, and the consolidation can give it strength in order to move up. I'll change the color of this one to red just to be concise. Those are all resistances. We don't see this chart regularly, so we have a lot of artifacts out here. Okay, so that done, I'm going to look at Bluebird. I'm not looking at all shares. I'm just looking at the ones which are active. So we have this zone where I said that we have got heavy resistance. So we already pierced that, went to the resistance of 4.14 and came back. These are all daily candles that we are looking at. The MACD is also bullish and the momentum is also bullish. The RSI has room to be overbought. I think that as far as Bluebird is concerned, it should be able to get into this zone. There could be heavy selling into it, but let us wait and see what happens because it's looking pretty good. However, the only thing that concerns me is the rapid raise. It has raised too fast. And that could also be because it had been languishing for a while despite the market knowing that lower sell is going to have the PDUFA date coming up on December 8th, and already there are 2 therapies which are already in the market for Bluebird. So this is a long overdue improvement in the price for Bluebird. There is plenty of juice left in it. So I think if the overall market does go down and the sentiments go down, then Blue would fall, which is the reason why I'm going to buy a covered call so that I don't lose the shares, and at the same time I can book my profits. Like I can book the possible sale price that I want to be in case I sold Bluebird, and fix my profits. And at the same time, in the event that it came down, I can keep the premium and make some money and reduce my cost of ownership. So that's my strategy with Bluebird. And if you look at PACV, it's just skirting this bear channel. There had been a little bit of consolidation out here, so I'm hoping that the consolidation would help it to jump out. And again, if I look at this as a bull flag within a bearish context, and that being very close to the upper limits of the bear channel, there's a very good possibility that PSEB can break out of this on Monday, assuming we don't have any shocks to the system, because momentum is pretty good, more room in the RSI for moving. MACD is also positive and bullish. So that's the case out there. And then I wanted to look at ARCG, which again is struggling to reach again the level. Of course, we have already met our cup and handle target somewhere on the 20th of November. But if the underlyings do well, then I think we are going to be able to break through this resistance at 26.02, 28.02 and move up. So that said, we are looking at CRISPR. So CRISPR has a bullish pennant out here because it's a bull flag. And the pennant is very tight the way I have drawn it right now. And we have resistance here which has held back CRISPR for 2 consecutive days. The second day, also the bulls tried to push it out, but the bears succeeded. RSI was overbought and it has cooled down a little bit. It has moved sidewards. MACD is still bullish, but it's slowly moving towards the signal line. So anything could happen here on Monday or through the week based on whatever the Fed says or whatever the yield curve expectations end up being based on the treasury sales and all that stuff. So we got a lot of interesting economic data coming up next week. So one has to be careful next week. I'm going to hedge my bets, as I said, by doing some covered calls, and I'll also sell FNGU, which has done extremely well for me, and keep the cash ready so that things, when they fall, I can buy again. Even if the market doesn't fall, the way I look at it is that if I have cash, I can always buy at a higher price and again sell at a further higher price and move along with the market. The only difference will be I have less number of shares in my hand, so I'm okay with that. So it's a psychological thing that we have to bring our heads around. So with that said, I think I would like to end this video here, friends. I hope you liked this. I did a much deeper dive. I just put all my thoughts that I had into this one. I would like to hear from you, some clues from you also, if any of you are also thinking deeply about the market and what's going to happen to QQQ, to FNGU, to our genomic shares, to the US dollar index and the interest rates. Please put in the comments your thoughts. It's very valuable for me because, as I said, I'm also a retail investor like you. I'm openly sharing my thoughts with you, and it's only fair that you do the same. And the entire community will benefit because they'll be reading the comments, and I also get a benefit of that. And maybe I'll use some of those concepts in my future videos and give you credit for it. With that said, I would like to bring this video to an end. Thanks and have a great day. Hope you have a great weekend. Bye for now.